When I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them. I read books on technical analysis. I read Edwards and McGee, I think that was the classic then, hundreds and hundreds of pages. And I read that whole thing over and over again. I read everything. And I thought the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way.
Welcome back to another video. In today's video, we're going to be discussing how Warren Buffett has accumulated such impressive investment wins over the past several decades. He is widely regarded as one of the most successful investors of all time.
In 2004, 5, and 6, we were building a couple million units. And basically it ties in with household formation. And household formation falls off dramatically in a recession, at least initially. I mean, if you look at 2009, I believe the household formation, was almost flat.
Born in 1930, he began investing at a young age and built his wealth over several decades through a unique investment style that has been the subject of much study and analysis. Warren Buffett is so wealthy through his unique investing style and what we can learn from it. Before we get started, please take a quick moment to smash the subscribe button. We really appreciate your support. Now let's get started on this exciting topic.
A good business is the one that earns a high rate of return on tangible assets.
Very simple.
That's pretty simple, yeah. And the very best businesses are the ones that earn a high rate of return on tangible assets and grow.
One of the key elements of Buffett's investing style is his strong emphasis on value investing. His approach involves identifying undervalued companies and buying their stocks at a discount to their intrinsic value. He looks for companies that have a strong track record of profitability and a competitive advantage in their industry. He also prefers companies with a strong management team and a clear strategy for growth. Buffett's investment strategy is also characterized by his long-term perspective. He is known for holding his investments for many years. Another key aspect of Buffett's success is his emphasis on risk management. He is known for being a conservative investor, avoiding investments that he deems too risky or speculative. Buffett's investing style is also shaped by his personal values and beliefs. He is known for his frugality and his aversion to debt, which has allowed him to accumulate wealth over many decades. He also believes in investing in companies that have a positive impact on society and the environment, and he has been a vocal advocate for corporate responsibility and sustainability. Finally, Buffett's success can also be attributed to his ability to learn from his mistakes. And he has openly acknowledged his past mistakes and the lessons he has learned from them. So think about the key qualities that distinguish his investing style. It is characterized by his emphasis on value investing, long-term perspective, risk management, personal values, and continuous learning. These factors have allowed him to accumulate wealth over many decades and to become one of the most successful investors of all time. His investment portfolio is widely followed by investors and analysts, and many people look to him for guidance on which stocks to invest in. Let's take a look at some of the stocks that he has invested in and explain why he has chosen to invest in them. One of the most well-known companies in Buffett's portfolio is Berkshire Hathaway, the conglomerate that he has been running since the 1960s. Berkshire Hathaway owns many subsidiary companies in a variety of industries, including insurance, manufacturing, and energy. Buffett has invested in Berkshire Hathaway because he believes that the company has strong management and a diverse range of businesses that can weather economic downturns. Another company that Buffett has invested in is Apple, the technology giant that has become one of the largest companies in the world. Buffett first began investing in Apple in 2016 and has since increased his stake in the company. He has said that he is impressed by Apple's ability to generate cash flow and by the company's loyal customer base. He also believes that Apple's strong brand and innovative products give it a competitive advantage in the technology industry. Buffett has also invested in financial companies, including JP Morgan Chase, Bank of America, Wells Fargo, and American Express. He has said that he likes these companies because they have strong brands, solid management teams, and a long history of profitability. He also believes that the financial industry is essential to the economy and that these companies will continue to generate strong returns over the long term. Buffett has also invested in consumer goods companies such as Coca-Cola, Procter & Gamble, and Kraft Heinz. He has said that he likes these companies because they have strong brands and a loyal customer base. He also believes that these companies have a competitive advantage in their industries and that they will continue to generate strong returns over the long term. Here are some tips on how to emulate his success. First, always focus on value investing, which involves identifying undervalued companies and buying their stocks at a discount to their intrinsic value. To emulate this approach, you can look for companies with a strong track record of profitability, a competitive advantage in their industries, and currently undervalued by the market. Secondly, you must be patient and take a long-term view. You should be willing to hold your investments for the long term, and avoid the temptation to make short-term trades based on market fluctuations. Third, you will want to diversify your portfolio. Warren Buffett is a strong advocate for diversification as he believes that it is important to spread your investments across different industries and asset classes to minimize risk. To emulate this approach, he should invest in a range of companies across different industries, and also consider diversifying into other asset classes such as bonds or real estate. And finally, try to stay disciplined and avoid emotional decisions. Warren Buffett is known for his disciplined approach to investing, avoiding emotional decisions, and sticking to his investment strategy even during times of market turbulence. Here are some of his most profitable investments. He invested $1 billion in Coca-Cola, which is now worth over $20 billion. He bought American Express, was facing financial difficulties in the 1960s, and Buffett saw an opportunity to invest today. His investment is worth over $18 billion. Buffett purchased See's Candies in 1972 for $25 million. The investment has since paid off, with the company generating over $2 billion in profits. He purchased a 20% stake in Moody's Corporation in 2000 for $500 million. The investment has since grown to over $3 billion. He bought a struggling insurance company called Geico for $2.6 million. Today the company is valued at over $40 billion. Buffett started investing in Apple in 2016 and has since accumulated a stake worth over $100 billion. He has been a long-time investor in Wells Fargo and has seen the value of his investment grow to over $20 billion. During the 2008 financial crisis, Buffett invested $5 billion in Goldman Sachs. The investment has since grown to over $10 billion. These are just a few examples of Buffett's successful investments. You can develop an investment strategy that is aligned with his approach. Happy investing! As always, please remember to click to subscribe and like this video, and let us know in the comments below about what topics you would like us to cover in future videos. We would also love it if you would share this with your friends. They'll thank you too.